Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the second day of the Precious Metals and Critical Minerals Conference. The next presentation of the day is from Aftermath Silver. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Ralph Rushton, President, Chief Executive Officer, and Director of Aftermath Silver, an OTCQX Best 50 company, which trades under the symbol AAGFF, and on TSXV under the symbol AAG. Welcome, Ralph.
Morning. Thanks for hosting me. My name is Ralph Rushton. I'm the President and CEO of Aftermath Silver, another company that's operating in the battery critical metals space. Our key project is in Peru. And over the next 25 minutes, I'd like to give you a very brief overview of what it is we're trying to achieve with our project over the next 12 to 18 months. The usual disclaimer that there are forward-looking statements in this presentation. Aftermath is a publicly traded developer of critical metals projects. We're focused in Chile and in Peru, and our key project, Berenguela, is in Peru. It's a tier 1 silver project that benefits from having copper, zinc, and manganese as potential co-products. It's in southern Peru, close to the city of Arequipa. We are included in the OTC Best 50 for 2025. We had our 63% share price appreciation in 2024. Board of directors are very experienced. We've all been in the industry for many years. In my case, I'm over 40 years in the mining industry. We have about $25 million Canadian in cash, and Eric Sprott is our cornerstone investor with about 24.8% of the company. This is the capital structure. We've got 315 million shares outstanding, which gives us a market cap of about 330 million Canadian, or I think that's roughly about 250 million US at the moment. As I said, cash in the bank is about 25 million Canadian. We trade extremely well. We're a very liquid stock. We've been trading over 2 million shares a day now for a couple of years. I think we trade about 1.5 million shares in the OTC and about 2 million on the venture. 52-week high was recently when silver peaked. We peaked at about $1.42, and as of this morning, we're about $1.05 or so Canadian. Our focus is on critical metals, primarily we believe to supply the growing US battery and EV industries. We're looking at silver, copper, zinc, and what we call HPMSM, which is high purity manganese sulfate. This is a commodity that has growing importance in the EV and energy storage battery industry. Key to the economics of HPMSM is that there is no domestic production of that in North America, but all of the EV manufacturers are clamoring for supply that is not Chinese controlled. Silver has dual demand from investors for jewelry and precious metal investment, but also for solar and electronics. It's currently in deficit, roughly 140 million ounces deficit last year between supply and demand. Copper speaks for itself. Dr. Copper is crucial to the electrification of industry, cars, grid upgrades, etc. We have a substantial resource of copper in this project, and as we go east on the project, I'll show you later, we are seeing more and more copper in the system. And another co-product would be zinc, although that's a smaller portion of the potential economics of the project. These are our three main projects. Cachinal is our third string project. That is in northern Chile. It is what we call an intermediate sulfidation system. It's a former mine. It has a silver gold resource on it. We focused in Chile on acquiring projects that are very close to infrastructure. So it's just off the Pan American Highway, about 10 miles off the Pan American Highway. It's at around 2,700 meters, roughly 10,000 feet or so. So for Chile, that's moderate altitude. But it is our third string project, and at the moment we're actively looking to joint venture or divest of that project. Chayacoyo in northern Chile, this is our second string project. We are currently drilling there. It's a vein system, hosts silver and gold. It's a former producing mine that we acquired from Mandalay Resources about 7 or 8 years ago. And this was the key project that allowed us to finance for the acquisition of the Berenguela project about 7 years ago. Berenguela is a carbonate replacement deposit. That means it's mineralization hosted in limestone. It hosts silver, copper, manganese, and zinc. Again, it's very close infrastructure. We're about 5 miles off a main road. We're about 5 miles from rail, power, road, and the town of Santa Lucia, which is a mining and resource-focused town. And it's an elevation of 4,200 meters. It's hard work going up there straight from sea level in Lima, but you acclimatize after 3 or 4 days, but you do have to watch yourself while wandering around there. Our aggregate silver inventory in those 3 projects, we've got about 122 million ounces measured indicated at Berenguela, 22 million ounces inferred. Jaycoya is about 35 million indicated and 11 million ounces inferred. So the total inventory is roughly 174 million ounces of silver and measured indicated, with about 35.5 million ounces of silver in our inferred category. On top of that, we do have gold resources, copper, and a substantial manganese resource at the Berenguela project, which we believe will add substantially to the economics of that project. The management team has grown recently. We've been adding talent because we realized, myself and my colleague Mike Williams, who've been running the company for the last 7 years, we're not engineers, and we realized that we needed engineering talent. We brought initially Michael Parker on board as the COO. He's a geologist who's run fairly large teams in Latin America. He is a fluent Spanish speaker with a Peruvian passport as well as a British passport. So he manages the entire team in Peru, and he's the only European or North American that spends any time in Peru. The rest of the team is all local. Myself, I'm a geologist. I've been in the industry for over 40 years, 11 years with Anglo American, and 20 years over the last 20 years, I've been focused in the junior sector in Vancouver, sort of a jack of all trades role. Mike Williams is a capital markets man with extensive networks all over the world, and he's been driving the financing of the project. More recently, we've added Danny Keating to the team. I've known Danny for a long time. He and I worked together at Anglo American. He's a mining engineer. He's been a mining analyst, and he's an expert in corporate strategy, managing projects. And more to the point for us, he has experience of the manganese sector, and he has built with our metallurgical consultant. He's already built a manganese processing facility in South Africa, so he knows the industry very well, and that's exactly what we needed to add at this point in the development of the company. Our CFO is Alistair Brownlow, wide experience with the TSX-listed exploration companies. Victor Grande is key to what we're doing in Peru. He's Peruvian, but worked for the World Bank in DC for a couple of years, speaks fluent English, has an indigenous Peruvian background. He manages our community relations, community development, sustainability programs at the project, and has done an incredible job of shepherding the project smoothly through the community relations aspect. Justin Taylor was somebody that introduced us by Danny Keating. Justin's a metallurgist with extensive experience of hydrometallurgical processes, which is what we are looking at with this project. And along with Mr. Keating, he was involved in the design and construction of a high purity manganese plant in South Africa. And then Mike Murphy has recently come on board. He's a planning engineer, business development, corporate finance, a jack of all trades in the sort of mining, engineering, financing market. I believe the last presenter probably went into the battery industry in great detail. I'm not going to do that. I'll just touch on how we see the demand for certain key minerals going forward. This comes from McKinsey, primarily from McKinsey & Company. Key here is that they see over the next 15 years, 14, 15 years, 700% increase in demand for manganese-based chemicals for use in the EV and energy storage industry. We're seeing potential large increases across the board, but unlike many of those commodities, manganese is currently not in supply within North America itself. So every company that needs manganese for its technologies has to currently buy it from China. The Chinese control 94% of the supply. So 90 to 95% of HPMSM production is currently from China. And the key there is refining capacity. There's manganese deposits in North America, but there's no refining capacity that can currently convert it to what is required for the battery industry. So the US has zero production. There are a number of junior companies that are looking at potential production, but most of them are undercapitalized. And the problem has always been trying to finance the development of the projects. So there's significant hurdles facing most of the sector that is looking at HPMSM. So looking in detail now at the Berenguela project, it's a large silver, copper, manganese oxide deposit. It's on top of a hill. It's very easy to get to. It's ideally situated for open pit mining. Our initial metallurgical work that we've done on the project demonstrates that we can produce a 99.99% pure battery grade manganese sulfate. In addition to silver doré, a copper product of some sort, and a zinc product, most likely a zinc sulfate. So we're looking at 4 potential products. It's within 6 kilometers of rail, road, power, and labor. We've already spoken to the rail authorities in that part of Peru, so we're beginning to understand the infrastructure costs and requirements. The deposit begins at surface, open pit potential. We believe life of mine, the strip ratio is potentially as low as 1. So that's for each ton of waste, each ton of ore you mine, you mine 1 ton of waste. And there's additional potential on the project for skarns. So these are the mineral deposits that form in limestones around intrusives. And we also believe there's potential there for a porphyry system of some sort, which is the driving force behind the mineralization of Berenguela. This is where we are. You can see the Santa Lucia in the middle there in the Berenguela project. It's about 4 to 5 hours drive from Arequipa, or about 2 hours drive from Juliaca. It's at about 4,200 meters. That has implications for the processing that we're going to look at, which I'll talk about shortly. We are within 350 kilometers of Matarani. It's a modern port on the south coast of Peru that's looking at expanding, and they have capacity to export potential product from our project. And the rail line has capacity as well. We've met with the port authorities. We've also met with the rail authorities down there. So as I said, we're beginning to understand the infrastructure that's available. This is what the project looks like. In the foreground, you can see some of the historic silver workings. It was mined at the turn of the last century by a British company called Lamper Mining. They were mining for high-grade silver. They basically just smelted the ore to see what they could get out of it because they didn't understand the chemistry of the manganese. So they mined about 500,000 tons. It would have been very high grade, probably 10 or 12 ounces per ton silver. And they got some silver and some copper from the project. But at that point, the chemistry of the process was poorly understood. So eventually they stopped mining there. Santa Lucia, you can see off in the background there on the right-hand side of the image, that's the local agricultural mining town. That's where our core yard and camp are situated, and where most of our labor, the people that we use for the labor on the project live. The project has an extensive work history going back to the early 2000s. It was originally purchased off the Peruvian government in the late 1990s by a Reno-based engineering company, Capers Cassidy. Dan Capers is the owner of that company, and he's a hydromet specialist. Dan was, if you Google heap leach of gold, Dan was one of the founders of one of the original brains behind heap leach technology. So he has a very well accomplished hydromet team in Reno. And they worked through the initial chemistry. They did some drilling. They did a little bit of open pitting there to get bulk samples. They sold the project to SSR, what was then Silver Standards, now SSR. And in total, over the last 20 years, there's roughly 450 drill holes have been put into the project. We are currently drilling there. We're drilling over to the right-hand side of that project with the aim of looking at a higher grade copper system, which we're seeing higher grade of copper towards the right-hand side of the project. There's another view of the project. That area that's in the cloud, that's under shadow there. That is the pretty much the limits of the Beringala project. It's at the top of that hill. It's open pittable. You can see the old workings of the darker areas off to the left-hand side of that. It's easy access. It's been easy to drill, and our focus is over towards the right-hand side of that shaded area. That's where we're going to be drilling for to see the extension of the high-grade copper in the system. And on the back of that, we've now revised the resource estimate twice. You can see on the left there the distribution measured, indicated, inferred. Measured is the highest confidence category of the resource. We are expanding that measured category at the moment. We're drilling in an area that we believe will be the potential starter pit for the project. And on the right-hand side, you can see sort of roughly the distribution of grade in the system. We're seeing very, very high grade silver locally, up to 1.5% silver, and up to 5 to 10% copper locally as well. So we know we're going to hit very, very high grade sweet spots within this. The system itself is about a mile long from northwest to southeast. It's about a third to half a mile wide at its widest point, and it goes down a maximum of about 200 meters, about 500 or 600 feet. So it's ideally situated for open pit mining. This is the resource that we've defined. So we have about 52 million tons in measured and indicated at a grade of about 2 ounces, 2.5 ounces per ton silver, 5.7% manganese, and about 0.6% copper. Within that, as I say, we're seeing very high grade areas, and on the eastern side of it in particular, we're seeing copper spiking. We have a hole over there that was around 150 meters at 1.2% copper that we will be following up in the next few weeks. And on top of that, we have another 14 million tons in inferred, grading about an ounce and a half per ton silver, 3.3 manganese, about 0.4 copper. So although the grades are on the inferred category are modest, this is open pittable. We're not underground, and it's a bulk mineable scenario. So the cost structure is quite low. And that's what the mineralization looks like in the core. You can see the black there is the manganese mineralization. The silver is with the manganese, and you can see remobilized copper. That's copper that's been partly dissolved, then recrystallized as malachite in this case. So the green mineral there is soluble copper, and the orange stuff is the waste rock. That's the dolomite in the project. This piece would probably assay about 20% manganese, maybe about 2% copper, and possibly up to probably 300 or 400 grams silver. So how do we process it? When I was a young geologist, if we looked at anything that had manganese in the system, we'd run away. We would avoid it. The chemistry was poorly understood, and it was always regarded as a deleterious element. What has changed has been the utility for manganese. It's now a crucial part of battery technologies, and that utility has changed, has driven a change in the hydromet chemistry technology that's used to extract it. So that now allows us to go through the hydromet research to get to a point where we believe that we're in a position to produce, as I say, silver, copper, zinc, and a manganese product. So the basic process is you crush it, you add acid, you get the rock into solution, and from that you can then extract through various stages copper, silver as a doré. Silver comes out in the slurry that's at the bottom of the tank that goes through a Merrill-Crowe circuit, so a cyanide circuit. You can then extract the other metals in the solution, and essentially you're left with a manganese solution, which you then put through some additional purification steps to get to whatever manganese product you want to look at producing. What we are examining is the initial stages of the operation will be focused heavily on silver for 3 or 4 years, and we will gradually ramp up the manganese production as we build out the project. So this is a simplified flow sheet. The last one was more detailed. This is simplified. So you got the oxide ore, you add sulfuric acid, get it into solution, and from there you can extract the various components, and you're left with this pink crystallized powder, which is the battery grade HPMSM. That needs to be around 99.99% pure. There are other alternatives for manganese. We can produce an agricultural grade manganese sulfate, which needs to be about 98% pure. It's a lower priced commodity. our preference would be to get to the high value product, which is battery grade. One of the constraints on this flow sheet is that it's an atmospheric pressure system that needs to get to a temperature in the 90 degrees Celsius range. You cannot do that at 4,200 meters without pressurizing the system. So we are looking at mining at the project up here. We would simply have a mining and crushing operation up here, and we would place a processing facility down towards the coast at lower altitude. We have less distance then to get the reagents, the acid, etc., to the ore, and we're also at an altitude where we don't need to pressurize the system. We either have to take the reagents all the way up to the project at Berenguela, or we can bring the rock down to the reagents. And our preference is to bring the rock down to the reagents and have a facility somewhere near Matarani port. We've already spoken to the authorities there, as I said, the port authorities. We've spoken to a sulfuric acid supplier down there. So we are well advanced with looking at the potential logistics of this. So rather than having a processing facility at the project, we will just have a mining operation there. Now, in terms of the exploration potential of the project, off towards the eastern side, northeastern side of the project, you can see Copper East on this slide. That is where we're seeing over 150 meters at 1.2% copper in some of the last drill holes we put in there. Those will be followed up in the current round of drilling. We were seeing very high grade locally. We're seeing from trace copper anything up to 10 or 15% in some samples. So we think there's really interesting potential there to add value via adding pounds of copper to the resource. And as we go that way, we're getting indications that we're looking at a hotter part of the geological system. That would imply that we are potentially looking at close to an intrusive source, possibly a porphyry source for that. So that's going to be investigated. And then down towards the southwest, we have the southwest intrusive target. Just off our concessions, there is an active iron ore mine. It's mining magnetite. And when you follow that trend onto our land package, the southwest intrusive target, or refugio as we're calling it, we're seeing copper at surface, lots of silicification, copper, silver, and manganese anomalies over about 1.1 kilometers, old workings. This is what that target looks like. It's that hill in the background there. You can see that's a silicified hill. It's been changed. Quartz has been added to it, which makes it more resistant. You can see the spoil heap from the iron ore mine in the near foreground. And then on the left-hand side, you can see the sort of copper mineralization that we're seeing there. It's copper oxides, likely bleeding up fault systems or fracture systems in the rock. And on the right-hand side there, you can see one of the little stockpiles that the old timers were hand cobbing the copper ore from it. So this is a target. It's quite a big target. We're seeing up to 2% copper at surface. Local, very flashy grades, but that's just related to those smaller high-grade copper vein that you can see there. But the bigger prize for us is a potential skarn or porphyry system below this. So we will be drilling here once we have the permits in hand. We do anticipate having the drill permits sometime in the next probably couple of months. We have the drill rig on site, so once we have that drill rig, we will be investigating this. Hopefully adding to the mineral inventory there on with a nice copper resource. Shifting to Chile, the second string project that we have is Chayacoya. It's a large epithermal silver target. It was mined formerly. It was an underground mine. We bought the project from Mandalay Resources for about 10 million Canadian cash and shares. It's currently open. The system has not been drilled off. We're about 30 kilometers off the Pan American Highway up a mine haul road. We have two large desalinated water pipelines passing through our project that we can potentially tap into. We haven't had those discussions yet with the owners of the pipeline, but we need about 50 liters per second. We currently have 12 liters per second water extraction rights. And those two pipelines, there's roughly, I think, 4,500 to 5,000 liters per second coming through. So we will be having some discussions with those companies as we advance this project. We are drilling on the project at the moment, although we've had some technical issues with the drill rig. We're looking at changing the drill rig out. At that point, we'll push on with the project. It's a limited scale. It's about 7 or 8 holes. The objective is to define the limits of the resource, just to see what the expansion potential is. This is the current resource. It's about 6.6 million tons, about 165 silver. That gives us about 35 million ounces measured and indicated, with another 11 million ounces in inferred, with about 58,000 ounces of gold and 15,000 more in measured indicated and inferred, respectively. It's a modest resource, but we think we can expand it. The objective is to get this up to about 60 to 80 million ounces a year, somewhere where you can see 4 to 5 million ounces per year production for 10 to 15 years. If we can get it to that point, we think we've got a project that would be very attractive to a mid-tier silver company. So just summing up where we think we'll be, what we're aiming to do over the next 12 months. We probably will expand the team a little bit more. We'll probably add a few more people as we go. As Chayacoya advances, we may need some additional people down in Chile. We will be adding consultants to the team. We are advancing the engineering quite rapidly. We do anticipate in the coming weeks we'll be making some announcements about the engineering side of the project and how that's going to progress. We'll be drill testing Berenguela, looking at the copper targets. We have samples in the lab at the moment that are drilled into the middle of the resource, where we believe we'll be starting to mine the starter pit operation. We're drilling there to infill that. We will be drilling at Chayacoya once we've solved the drilling machine issues there. We'll be persisting with the drill program there, and we'll see additional metallurgical results as we scale up the testing at Berenguela and increase the scale, increase the size of the samples that we're running through our test facility there. And we are looking at expanding analyst coverage, research analyst coverage for the company. We're in discussion at the moment with a couple of different groups who are looking at the project, who've expressed an interest in perhaps initiating coverage. So fingers crossed we'll see some additional coverage. So that, in a nutshell, is what we're aiming to do, and a very brief overview of the project. We think we've got the right engineering team in place now. The guys that we brought on board are extremely experienced. They know what they're doing. They know how to handle high manganese mineralization, which is what we're looking at Berenguela. And the project will be moving into a much more detailed engineering stage as we move through 2026. So on that basis, I will take a few questions. As a silver copper manganese project advancing towards pre-feas during an EV-driven commodity cycle, do you see an opportunity for Berenguela to be branded as a strategic asset at the policy level? Yes, we do. We have had some discussions already with the US government. We've been speaking to a number of the state level governments about potentially looking at funding for installing a processing facility directly in the US. In that instance, we'd be looking at mining and shipping the ore to the US and putting a processing facility on deep water where there's cheap power. Yes, we believe there is an opportunity to pitch this as a strategic asset on the doorstep of North American EV markets. Now that you've delivered on key technical and ownership milestones at Berenguela, do you see Aftermath as more likely to be a consolidator of silver critical metals assets or a strategic target for a large producer? I think there's opportunities in both. The manganese, the pure manganese focused unit sector has suffered from lack of interest from investors. So yes, there are potential opportunities within that we've seen. You've got companies that are trading at 1/10 of our market cap that have additional manganese assets. We haven't looked at it in great detail, but it's an obvious question. Is it a strategic target? Yes, but I think we need to demonstrate the economics through a pre-feas study prior to it becoming an acquisition target. Do you see potential US or allied country incentives for non-Chinese HPMSM impacting the economics? Yes, we do, and it's a model that's already being followed. One of our competitors out of Australia has already had some interest on the US side of installing getting funding for installing their processing facility in the US, and it's certainly something that we are investigating. How confident are you the existing infrastructure can support a full-scale HPMSM operation, and what CapEx is required to upgrade it? Yes, the infrastructure can support it. There's capacity at the port. We've already had that conversation. We understand the capacity at that port. Where we are, the rail network is 5 to 10% utilized. CapEx remains to be seen. That's going to come out of the current work. Are you seeing any change in the tone or urgency of inbound interest from OEMs? There's been a lot of tire kicking from the OEMs over the last 5 to 10 years. I think they've looked at all of the projects. What's changed recently is we've seen one of them actually now move to put out a tender for potential supply of HPMSM. There was one of them has put out a tender for 3 years of supply. So that's the first time we've actually seen any direct interest. But yes, they have been sniffing around the entire sector. But as I say, it's been a lot of tire kicking up to now. But I think they're beginning to understand the urgency and the lack of processing capacity in North America. What are the main permitting, community, and ESG challenges you foresee at 4,200 meters? What tangible progress have you made with local stakeholders? The land is all privately held. We have access agreements with all the landowners, and we are looking at potential long-term leases for that land. 4,200 meters, the main constraint for us is the chemical processing. The hydromet has to be done at lower altitude, or you have to pressurize the system. But we've got a plan for that in that we move the ore down towards the coast. We are not dealing with the community association. We're dealing with private landowners who have been supplying the labor for the project. We have a very open team. We have somebody on site all the time. It's largely a Quechua speaking community, so we have Quechua speakers, and we have a very, very open book approach. If people want to come and talk to us, they can ask questions. We do have community meetings. So far, touch wood, we've had no issues. Primarily because I think we've approached it the correct way from the start, with a very engaged team who understand the project and understand how to communicate it. As you move deeper into the PFS and drilling cycle, what concrete steps are you taking on the IR marketing side to make sure your execution shows up as sustained multiple expansion rather than just short-term trading spikes? I would say the short-term spikes in part are a product of the silver market. We do tend to trade with the silver market. I think you can see the reflection of our broader marketing activities and the volumes that we trade. We've been highly liquid, and we have been for quite a few years now. And I think that is a reflection of the work that we've done in the marketing. We do a lot of presentations. We go back time and time again. And I think the main reflections, the volumes, the spikes are somewhat out of our hands. As I say, we tend to trade with the silver price in part. And with that, I think we are done with the questions.